Good morning everybody, it's Chris here from Serene Education with the 4 majors and notice update for the 7th of March 2011. Hi guys, I'm going to be on 4 majors on our larger time frames. Just get a feel of things. Okay, let's have a look. Weekly, pretty much almost a bearish engulfing, almost a tweezer top. Very similar to the one in the back. The only difference with this particular one is not in engulfing. This one will be pretty much engulfing that range. Nice tweezer top. Similar and start of play this week, we are seeing downside movement at the moment. CTC on our weekly is still negative. You can still see we're still below the institution, so that's pretty much dictating downside. Daily, a very interesting set of things happening here. Swing highs obviously will dictate upside movements. If you took the wick to wick, you'll notice that yesterday's price action, bearish engulfing here at this prior hesitation, is a clear break of that trend. Spinning top, we want a decision candle because we could have actually had a bounce here, a nice hammer of some sort, or a bullish engulfing, a morning star at a support, and we could have seen price rallying. However, yesterday's candle punching through that, really engulfing yesterday's the prior candle, and heading lower to these price support and resistance levels around the 1305 mark, which takes us to the 50 period moving average. As it stands now, so trading at this consolidation area here, we could see a slight pullback, but ideally as things stand, this candle yesterday has now formed a new swing low. So we've had an all-time high at the top here. As I mentioned, you take your highs, lower swing, and if you just draw a small trend line over here, you can see that price action is now to the downside. 20 period above price. CTC the last couple of days has gone red. Okay, broken upside trend. However, this happens to be a very strong prior resistance through the latter part of October and December of last year, and through this year, January and February, a lot of support. So 1305 psychologically, we need to see a break of that. We could see consolidation as we head into this area. So could be seeing small trading ranges as we head into this psychological support. If we have a break of this by the end of this week, then all we could see is definitely these areas down here at 126500 as definitely being favored for ultimate goals. And we could see a punch through. What we want to see is a bearish engulfing through this, a definite punch lower, then a slight pullback, which will confirm this is now prior levels of support will be new resistance, and then we see a continuation lower. So as it stands now, if you look at your 4-hour time frame, if you use these lows over here to see where the swing, you can see for the first time in as many weeks, we are trading through, or as many months, put it that way, we are trading through the institution moving average, which is not a good sign. Okay, swing low, as I mentioned, punching through for the past couple of days, and trend direction moving lower. Price at the moment is testing or retesting this trend line. If you take the high to this low to see the retracements, the 38.2 is in play as we speak. We'd like to see that 38 acting as a nice ceiling level, but we can go as far back. The retracement could take us back to 50 or 61.8, or to the underside of this price swing. Okay, we are still trading below the institution moving average intraday, so sentiment is very negative. Okay, 20 period is crossed over. Our CTC on the other side is now extended red, so we shouldn't be looking for anything other than bearish sentiment or moves. Pullback, as you can quite clearly see here on our hourly chart. This is my entry chart. I want to see, I'm in this particular one. I've been in for a number of days now. RSI is well below the 50. However, as we've been moving lower to that all important 1305 mark, there we go, because that happens to be our very strong support and resistance on our daily. You'll notice that relative strength has kind of bottomed out at 35 on RSI. Okay, even though we're punching lower, quite clearly see the lows here. They're being squeezed now between 2 points. Price is starting to consolidate. Okay, so as it stands now, we want price to remain below 45, because you can quite clearly see once we've been below 45, these pullbacks have only taken us back to 45-ish. So as long as it remains below 45, we should still be within this overall trend, and she will find resistance at the price support. So a lot of support through here. There we go. I was going to put this in so you guys can see it. So price support, will this be a new resistance, and then we'll see a continuation lower. The moment she breaks above that 4500, If you're trading long term, then this will be a swing here at 13,200. Just be careful that we could see consolidation to the upside. As long as it remains below 50, we're still in a negative downside trend. Moving on to cable, if you look at the weekly charts, a nice little shooting star here at resistance. We know 5900 happens to be a very strong daily resistance area, and we had this piercing candle, went up to the 50 period moving average, and however it's starting to fall now. If this is a bearish engulfing, if this week can close lower, that'll just tell you that price sentiment is no longer looking for upside movement, and we could clearly see we have swing. This will form a new swing low, and price should be ideally looking at price support and resistance levels, and that'll take us around the 15,400 mark to start off with. Long term, a break below that, then price is definitely going to be heading to these all-time lows way down here. We had a slight hesitation at 15,100, but ultimately these targets way down here at 14,200. We've been there before. There's no reason why we can't go there again. Okay, that institution moving on a weekly now stepping in, acting as a ceiling level. Price needs to be punching through all that. Don't see any of that sentiment falling through on the daily time frame. If we look at the daily chart, you can see all those highs here way back in April of last year, and you can see those swing lows as we progress into the new year. Institution moving average acting as a cap previously going through October, November of last year. It's done exactly the same thing here. We had a failed breakout not too long ago at 15,900. We wanted price to actually find support there. Price failed to find support, pulled back, bearish engulfing at a ceiling level. We've had a pullback under that, and we've seen a continuation to the downside because of that. So as it stands now, you can see that the continuation, 100% of that move is going to take us back down here to the underside of 15,600, 15,1700, which is where price is trading quite close now at the moment. So be heads up, that's ideally going to be our next target for this pair. So in our intraday time frames, you look at the 4-hour, for example, you can see price failed to rally over there, and you can see we've had price support and resistance roughly around the 1568 or 1600 mark. Ideally, that's where we'd like to go to. Price is starting to slow down as we head towards that area. We take these high to the low, the pullback. 100% is not too far from here now, guys. So if you just pull back, there we go. 100% has been breached. So we're seeing a pullback in play. As long as it maintains itself underneath the institution moving average on this time frame, the lower time frame is saying that bearish sentiment is still favoring lows. So wait for the pullback to continue and get a nice bearish engulfing, then that'll be entry candle, and your stock could be placed above that. On my entry candle, the 1 hour chart, you can see those pullbacks occurring. Nice pullbacks. Breakouts of price swings, supports, trading well below the institution moving average, trading well below the RSI now, and price is moving lower. I'm not seeing any divergence as price is moving lower, and you can quite clearly see that our next part of call should be roughly in and around the 1565 area. 15700 long term has been a very strong support and resistance level, and it's also 100% of where price is trading at the moment. So a nice break below that would continue down to at least 1650, so there's another 50 pips inside that, and then a break below that, as I mentioned, we'll be definitely in some negative sentiment long term. US dollar Swiss franc, let's have a look at this pair weekly. Yeah, hesitation, and that comes through as price broke through the 9100 mark on our intraday or on our daily and intraday charts. CTC remains, we've had a nice pullback now. We are trading well above the 86 mark, which happens to be where price once was pegged, the US dollar Swiss franc. But if you look at the dailies, you notice that price ranged around the 9110 mark for quite some time, a number of weeks, and then failed to build on that to the upside. Shooting star resistance at resistance, and price fell over and broke to the downside. However, we had a couple of days of support. 4 days of support, bullish engulfing at the support area here at 89.50, and prices bounced up and now closed higher than price support. Yesterday's the day before finding support here, and yesterday building on that. So ideally we should be looking at the 92.50 mark as potential target intraday, back to the 50 period moving average, or back to the ceiling level that we saw recently as the US dollar gains strength against its major counterparts. Looking at the 4 hour time frame, you can quite clearly see 9110 now trading above the institution moving average for the first time in as many months. A downside trend being breached, well, clearly been broken as prices headed higher. Ideally, what you want to do now is you want to see a bit of support on this pullback, and then look for an entry to the upside at the highs. So if you just take the low here, the bounce to the upside, this pullback, you can quite clearly see we've had an evening star here. It's formed an evening start where we've had upside movement, indecision, decision, and that's taken us lower. Look for the pullback. Price can maintain above 38.2 on our 4 hour, then look to see price moving to the upside on this. And otherwise, as long as it trades above the institution moving average, above 915, then we should be looking for continuations to the upside in the next couple of days or so for the remainder of this week. As you can see now, if you just draw on a trend line, a very rough trend line, the bodies, you can see prices in this area. So look for some potential to the upside on this pair. We have clearly broken through on the upside of daily. So 950 would definitely be, sorry, the 925 area. 925 area would definitely be on, as it's back to our 50 period moving intraday. So as it stands now on an hourly, let's look to see. RSI is trading above 50. It has started to plateau as prices moved higher. But if you look in the sense of things, as the trend is moving higher, price is in contact with that trend line. So as long as we maintain these highs and we're moving higher, then ultimately we should be looking for potential bounce to the upside, because we're trading above a very strong support on our daily time frame. So as long as price stays above the RSI relative strength, and price fails to break lower than the support over here, which happens to be down here, as long as we can maintain above 55, this RSI will keep getting stronger, and then we can have a nice, so on an hourly, look for a nice bullish engulfing. That'll definitely give us a signal to go long to the upside for the remainder of this week. Last pair of the day is US dollar Japanese yen. We've seen a pullback for this week after a hell of a lot of movement to the upside on our weekly chart. You can quite clearly see that pullback in play as you speak. We've broken through 80, which happens to be a very strong prior support and resistance level. As long as price can maintain above these levels, then we should see just a consolidation pullback and then a continuation in the next couple of months. But as long as price can stay above 80 long term, then we should see price heading further to the upside as the months progress. But as it stands at the moment now on our intraday or our weekly time frames, you can see on the daily that pullback in play. A lot of momentum to the upside, going into the 161.8 overextended area here, as price made the initial first move over here. Then we had the pullback, and then we see the breakout. You can quickly see 100% breached, 61.8 breached, financing support, and then trying to head higher to 261, but well overbought at that stage, and we saw price pretty much top heavy and just falling over. As it stands now, if price can actually find or maintain its level above 80.50 at least on our intraday time frames, because you can see quite clearly that price hesitated or consolidated around this area, then we should see price actually finding a bit more momentum, getting a breather, and then trying a reattempt of those highs. So if you want to, you can just put a note and put 80.40 down on our intraday charts. That can be our stop measure. As long as price can close higher or stay above this area, this float area here, this is going to be our safe zone. The moment it gets below that safe zone, then we should be looking at potential further downside movements. So as it stands at the moment now, you can see price is consolidating. We've had two parts of our CTC strategy in play. However, we still need the other two. Until that other two appear, we're still going to look at a bullish consolidation move as we speak. Price is making lower swings to the downside quite clearly, but we're still trading above that very important 80.5 mark, prior support, major support. So let's see if price can maintain those highs, and if that's the case, then great. If you take the all-time low here to the high for a retracement, you can see that 23.6 is bang on that level. Okay, so 23.6 has to be breached. And once we get a breach and our CTC confirms that we should be looking for it goes all red, then it tells us that yes, the sentiment is genuinely looking short, and then we can look at least to 38.2 back to 79.60 as our first target. 50% will take us back to the institution moving average here below 79.80, and then 61.8 well overextended, and we should see price moving back towards those levels to the downside, 78 to 100 in particular, because that was a very strong price support and resistance level not so long ago. So if it gets below 80, we're we could see price reattempting the institution and back to those levels again. So the longer US dollar trades above this 85, psychologically we could see a bounce here and a reattempt at below the 8200 that we had just recently. So let's see if we can maintain those highs. Let's have a look at the hourly chart. You can quite clearly see as price reattempted those highs recently there, notice the RSI definitely falling lower. Okay, so this higher than the previous one, but definitely lower, and for the first time in as many well, in a month, we're trading a lot more below the 50 period moving average. We're going to see a pullback if it fails to actually rally again. This is very, very interesting because you can start seeing negative sentiment creeping into it now, guys. So there's your lower swing, your previous swing from your high. Okay, so trend intraday on an hourly is looking like so. If I can make it nice and big so you guys can see it. There we go. Okay. It's now broken through the institution moving average. Not a good sign. 50 period moving, the 50% line on the RSI has been breached, and our CTC on either side is red. Yes, we've had a blue for consolidation, not a problem. Okay. What we should be seeing now, and what we want to see, if this is to be genuine bearishness sentiment creeping in and we're going to see further drops, is ideally we want to see the institution moving average now acting as a ceiling level, and we want to see price falling lower. Okay, to actually work in conjunction with that, because you can see these swings over here, for example. If I just take these ones, that's the high, swing low, and this swing low over here. It's still lower, however, as you can see, price is retesting these swing lows. So is that genuine? Because now it's making a support on RSI. You can see that RSI is now plateaued out as we stand underneath the institution moving average. It has to stay below the previous swing on the RSI to confirm that it's genuine sentiment. Okay, we want RSI to be moving in the same direction as price. If RSI is moving against price direction, then you know that the sentiment is not true sentiment, and we should be heads up, very cautious in trading. As it stands at the moment, now we have on our hourly, we have most parts of our strategy in play. We have price trading below the institution moving average. CTC on either side still telling us bearish, that the sentiment is starting to look bearish now, and as long as price fails to rally above the institution moving average on this time frame, you can see quite clearly what's happening to be price support will now become new resistance. If this resistance level stays in play and we can't see price moving higher, then we're going to see either a shooting star or bearish engulfing at this level, and price should be looking back down to those levels here as our first target, as I mentioned. Okay, and that first target would be this area here at the 80-40 mark. Okay, so I'm going to put that in on my hourly chart, 80-40, there it is. So that'll be my first target. Okay, once we break below 80-40, which happens to be the 23.6, then we're looking at 38.2 on our 4 hour as our next potential target, and that's just above the 79.60. So you can do that on an hourly. Go back to your hourly, 79.60. That'll be my next target. Okay, that'll be my second target. So first target would be the 80-40. Okay, if price fails to build on that, you can quite clearly see we are seeing a bit of support, a lot of wicks here. It's trying its best to try and to try and find some momentum to the upside, but wants to keep higher, and as long as it does that, then we're going to start seeing bullish engulfing and price moving higher. Fail to do so, we're going to see resistance being found here for the third time. First, second, third attempt, failure, 50 period moving average coming over. This trend line intraday RSI here, you can see the trend line will start coming to play and will push. It could potentially push price lower, and 80-40 would be your first target. Break below 80-40, then your second target would be the 38.2 on your higher time frames, which is 79.60. I hope that makes sense, guys. Okay, so we got to see a break. Now we are bearish engulfing. Otherwise, price is just moving consolidative under this very strong resistance line intraday time frames. That's it, guys. I hope you have a fantastic trading day. Listen, we're going into non-farm payroll this Friday, so there's going to be a lot of news between now and then. Just look at the news today. There happens to be quite a lot. Not a hell of a lot on the European session. We have German factory orders, month-on-month figures at 11 a.m. GMT this morning. The forecast is to be obviously a lot less than the previous one. If it does come even lower than that, we're going to definitely see that working against the euro. We know there's a slowdown in the markets. The previous figure was 1.7%. They're expecting a forecast of 0.6. So definitely almost literally a a percent change there. This afternoon we have a lot of news. US side, we have the ADP non-farm employment change. Previous week it was 170k, expecting a forecast of 204k. So it'll be interesting to see if that comes out like higher or lower, how that's going to reflect the US dollar. Some more news. And then we have the revised non-farm productivity quarter-on-quarter figure, expecting to be slightly better by 0.1%. New Zealand, there's a hell of a lot of news. There's the official bank rate, interest rates for New Zealand tonight at 8 p.m. GMT. They're forecasting no change with the interest rates, 2.5. It'll be interesting to see how that happens. So heads up, make sure you factor that into your trading. If you are trading New Zealand dollar, make sure that you're aware of it, because the interest rates, it'll be interesting. They don't forecast a change. I don't see a forecast change. But you never know with the markets these days. Anything's possible. So keep aware of it, guys. Just be aware of the news. Okay, don't be trading around very, very important news announcements. Interest rates is one of those. So heads up. Until further notice, I mean, just keep it simple, as I keep mentioning on all my videos. You've got to keep it simple. Don't make it. Don't overcomplicate things. They don't need to be overcomplicated. As long as you're following the rules, then you should be in winning trades majority of the time. And then I'll see you tomorrow morning nice and early. Until then, trade serenely.